Hello and welcome to the Jake and Gino podcast. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And on this podcast, it's all about raising capital. Today we have on the show Darin Mangum. He's widely known as America's premier securities lawyer with over 25 years at managing partner at Mangum and Associates. Darin has guided entrepreneurs, syndicators, and investment firms through the complex world of raising capital. He's also the author, I'm going to hold it up for everybody, of Raising Capital with Confidence, a practical guide to navigating securities law and funding strategies. Welcome to the show, Darin.
Hey, Jake, thanks for having me. I'm excited.
Listen, my first question right off the bat, who should not be raising capital?
Who should not be raising capital? Obviously, if you've got access to your own bank financing, or if you have your own capital that you're willing to put at risk, you should not try to complicate things by, bringing in other people's money. When you're raising capital, you're bringing other people's money in. That not only triggers the securities laws, but it also raises the level of complexity in your life, right? Not only legally, but just as a practical matter, right? So if you've got enough money, your own investment funds, you can maybe acquire that property, or you can, acquire that company with your own capital. That's obviously the easiest way to go. Or if you can get a loan, I mean, a bank is willing to loan you the money. That's just the easiest way to go. The problem is most people, they get turned down by banks, or they want to do this big thing, but they don't have enough money, or maybe they have money, but they don't want to like bet the farm and put all their retirement into that deal, because, they want to spread the risk a little bit. And, that's really okay, that's what other investors are for. And there's a way to do that. And, but yeah, I mean, certainly I would also say if you're not a good communicator you're not willing to keep your investors up to speed. I mean, in our law practice, that's where most of the problems really lie, is in just the basic, hey, we got bad news, the project's taking too long, it's costing more money than we thought. Those are difficult conversations. And if you're not willing to engage, if you kind of put your head in the sand, you're just gonna make it worse, right? So I would say, if you got your own money, or if you don't like dealing with other people, then yeah, don't don't try it.
I got to ask you, how and why did you become an attorney and get into this business? Because it could be a very painful business, very cyclical. Now AI, everyone thinks they're an attorney now. You jump on AI and you're my own attorney, so I don't even need Darin anymore. Like, what made you get into this business?
Oh yeah, well, I mean, yeah, that's yeah, it's a great question. I mean, I really got into the business. I grew up in Houston, Texas. Grew up in the oil business. My dad was a petroleum engineer. He was not a lawyer, not a money guy. He was an engineer, right? So he knew how to go out and find, you know, good places to go drill for oil and gas. But he didn't know the law, and he didn't know how to take other people's money, and so he did it wrong. He did it wrong multiple times, and I always see him like he's got a and he was an honest guy. He very honest, for an oil guy, oil man. He was honest, but yet every year it was the SEC, it was the Texas State Securities Board, and just on his case, just investigating him because he just didn't do it right, And finally, he got a partner who was a lawyer. I mean, he wasn't a securities lawyer, but at least he knew enough to say, hey, you know what, there's some rules we should follow. And instead of just putting all on the back of a napkin, we should really try to, have some good paperwork, look for proper, what we call exemptions from registration, because they're out there. I mean, the road is clear if you know what it is, And so when I wrote this book, I put on the cover, this path. I don't know if you see the,
I do now. Now that you
yeah, I've
say it, I
got some
see the path.
skulls and some snakes and
Yeah.
some pitfalls on either side. And it's like, look, you just got to stay on this road, and eventually, you're going to get it. It may take you longer than, it may take a while, but, eventually you're not going to just get, fall in a trap, and that's the thing, regulators are out there, you know, supposedly trying to look out for the little investor, but they trip up so many well-meaning entrepreneurs that, they were trying to do the right thing, but they just did it wrong and didn't consult an attorney and just got in trouble. So, kind of seeing my dad go through that. And I'm like, I don't want, I mean, I'm very interested in that space. And I had a securities license for a while before I went to law school. And I kind of saw that, okay, this is important. And I thought, well, this is a space that I really could really help people, and that's really what I enjoy so much about the law practice. And, I wrote this book really for that audience. Hey, people that are trying to do the right thing, they don't want to go to jail. They're just trying to raise, pool some capital to chase their dream. And there's no reason why you can't, do it right, And so that's kind of what got sparked my interest. And now it's been over 25 years now of practice, and it's really, really, really rewarding helping people do it.
It's interesting. My business partner Jake is a big fan of the show Landman. He turned me on to the show, and I'm like, wow. As you were saying that, I had pictures of that guy on Landman just driving around the oil fields, going,
Yeah.
"I know what Darin's talking about. They're not the most ethical or scrupulous human beings, but on the flip side, it's a really tough, dangerous, unrewarding business at times. It can either be boom or bust. So it's
Boom or
very
bust.
difficult. Yeah, it's very difficult. Now, I got a bunch of questions on the book and all, but before I ask about the book, how has the securities industry changed? Because Jake and I, when we bought our first deal back in 2011, there really wasn't that much talk of the individual investor becoming a syndicator. It was a lot harder to raise capital back then. How have you seen over the last 15, 20 years? How have you seen the change in the industry over the last 15 years as far as raising money? I mean, the ease of it, just be able to advertise for it. What have you seen change?
Well, yeah, I mean, 25 years ago, we were talking about the dot-com boom and the internet. What's the internet? What is that? And kind of like right now, we're talking about AI. That's going to change the future. I totally believe it. We use AI in our firm. I've got a Darin Mangum AI is my virtual self that we created just to answer questions about securities law. So, as far as technology goes, I mean, really, the internet has changed the game as far as, when I first started, we were, printing, this is an old prospectus, for raising capital. It's like, you got to print these books, and, oh, we made a typo on page 72, and oh, we got to go sticker all those, and then we got to ship them out. We're using FedEx. Just the cost of, printing and just distribution of those. Nowadays you've got these online platforms. You've got just the speed of, you know, just being able to communicate, not just raising capital in your own local town or people that but it's really global. And that's just been, that's been that way for a while now, and that's just going to get better and better. And also the securities laws have been, have adapted and changed with that. I mean, regulation crowdfunding. I mean, and now we kind of talk like it's been around forever, and that's just a big, a huge deal, and that it continues to evolve. With this new, the new SEC with the Trump administration. Being very much, hey, we're going to be pro crypto instead of anti crypto. We're going to be like, hey, let's try to make it easier, on the capital raisers. Yeah, they still want to make sure, the bad guys, don't get involved, but at the same time, we're not trying to move the goalposts all the time. And so, it's just been, that evolution of technology and regulatory change. I think has been a plus for, allowing more people to get involved in the early stage companies and all of that. That's just about all a net positive in my view.
So, in your view, do you think that asset prices have reflected that ability to raise capital, where there's more capital flowing into that asset class and the ability to be able to tap into that? Whereas back in 13, 14, it was a lot harder to raise capital as opposed to 19 and 20. Forget the interest rate environment. Interest rates were higher back then during the boom of 2021 and 22. I get that. But don't you think there's a direct correlation between that as well?
Absolutely, absolutely. I think you're seeing more and more. There's more and more capital available, and the barriers to entry are way lower
Mhm.
than. It just keeps getting, lower and lower as we go. Yeah.
And the title is Raising Capital with Confidence. Define confidence. I mean, anybody can raise capital, but how do you define the confidence piece in that?
Yeah, confidence meaning that, hey, I can sleep at night and I don't have to worry that did I, are the black helicopters coming for me tonight? Because I did it wrong somehow. I mean, the confidence being, you got to have your legal ducks in a row. And if you've got that confidence that, yeah, we're under the right exemptions, we have the right paperwork, we've got the right structure, and all of that is in place. And so we know what we're doing. We're not like, I mean, I see clients contact me all the time, or potential clients, where like, hey, we raised all this capital from from my grandma and some friends and family and some other people from Dubai. And, it's like, well, they don't even know. Right. And so they're worried, and they don't have the confidence that, yeah, they maybe raise some capital, or the confidence is coming, doing it the right way and making sure that you are on solid ground. Because there's nothing worse than, oh, he's put all this time into this great venture, this great company, this great project, and and lo and behold, some technical violation, or some regulator is going to just come rain on your parade. I mean, you may saw all the merits are there, but you just didn't do it right, and it just causes so much pain and suffering that is not necessary.
Darin, I'm going to share a story with you about my first investment with the gentleman who asked me for capital. It was back in 2005. Gentleman's name, I like to call him Maserati Mike, because he drove into my restaurant at the time with a nice gold Maserati. And he basically said, hey, I've got this mobile home park. And I actually had been referred to him by a friend, and he had some type of business plan. I knew nothing about real estate. I had money. He had a deal. I put money into the deal. Unfortunately, I didn't know due diligence. I didn't know what a cap rate was. I didn't know what a 506, a Reg 506 C was at the time. I didn't know anything. I was actually investing in a security because I was passive. He was active, and I was expecting already. So he didn't even have any documents. He had no money in the deal. 18 months later, the deal goes belly up, and I'm pissed off at him and mad at him, which I probably should be, but it was my fault. I didn't know the business. I was not responsible. I didn't know what I was doing. That was 2005. There was no Google. There was, but not really. What are some of the mistakes you see investors make when they start raising capital? Some of the red flags you see. I just can't believe people today are going to get money from overseas, get money from everywhere. I mean, you must be living under a rock in the year 2025 if you haven't heard of some of these horror stories or Ponzi schemes or whatever. But it still occurs, and I'm still amazed by that. What are some of the mistakes you see people make right now raising capital?
Yeah, I think, yeah, definitely. Well, you asked a question. What are the investors that what um, what mistakes do maybe investors make, right? And the key is not really reading the reading the offering memorandum. And I know you hate to read they are like 100 pages, right? And and sometimes the promoter or whoever's selling it to you say, oh yeah, here's our PPM. Or even if maybe they don't have one. That's the first red flag. If they don't have one, if they just have a pitch deck, and then, hey, here's a subscription agreement, and it's like, well, wait a second, I need to see some use of proceeds. I need to see the disclosure items that would be typical in any kind of investment, right? Whether it's a mutual fund, you're going to get a prospectus. Problem is, we just don't have time. Investors, oh, we're just too busy. We just like what we hear. It sounds exciting, and I see it all the time. Even in we've we've done a lot of these special purpose vehicles where they'll buy. Hey, we're going to buy some stock in some privately traded company like SpaceX or something like that, which sounds super exciting. And they got nice pictures of Elon Musk, and they got, oh, this is really cool. I'm in because I want to get in on that game before it skyrockets in the future. But they don't really read the fine print as to what am I buying. In their mind, they're thinking, oh, I bought some SpaceX stock the other day. Well, in reality, they're buying an SPV who holds maybe some options that could buy some stock from maybe a third party. I mean, it's just like you just follow that little rabbit trail down a little ways, and you say, you know what, I may never see my money ever again, potentially. Now, if you like that game, if you're a gambler, if you're like, hey, I got plenty of real estate, I got my retirement, and I'm going to play in this space, then that's fine. It's a great space to be in. And if you could lose 100,000, 500,000, not a big deal. then great. Then maybe you don't need to take the time and read the paperwork. But most of us aren't in that game, right? We're just like, okay, I'm putting in, maybe 50,000. Okay, that's a big chunk of money, right? I would like to not to lose it. So, just you just have to take a little bit of time and say, hey, get what, I just need to look at the disclosure and we've represented investors also before where we're just say, hey, look at all here's like 10 red flags here, and they just go ahead and do it anyway. And we're like, okay, that was your $1 million, but hey,
Well, you
you
lawyers are deal killers. That's why lawyers are deal killers, but you have to be deal killers because you have to look at it from the perspective of limiting your downside risk.
and I'll tell you a secret. If you're trying to raise capital and you get a lawyer as a potential lead, just move on. We are the worst investors, not because I mean we are bad investors, but we're also if things go bad, then we're lawyers and we make your life miserable, right? So just skip over them. I'm saying you got to go for doctors and dentists. Those guys are great investors because they're even if the deal goes bad, they're too busy to even come and chase you, right? Because what I'm saying. I mean, I'm kind of half joking,
You're
but kind of half
facetious,
not,
but at
right?
the same time, not. Yes, I agree with you 100%.
There is a certain type of investor that are more likely good, better than not, right? So I mean, yeah, I've never seen a happy lawyer investor ever, and I've never seen, so I just say, just a word of advice, just skip over them. Don't call me to be an investor because I'll be you know, I'll spend a month like reading your documents and then still won't you know. So anyway,
It's important, Darin. This I'm going to give everybody a tip here. If you're an investor, you have AI now. You can put the operating agreement into AI, number 1. But number 2, if you're investing 10,000, 50,000, 100,000, why not spend an hour or two with an attorney like Darin and have Darin review the paperwork for you, and then he can spend some time with you to go over the paperwork, and you can ask Darin, what should I ask this lead sponsor about my deal? Isn't that a great use of time and money? Because listen, $500 to risk 50,000, I think that's a sure bet. But I think just people, I mean, I wish I had that advice. I wish I could have
well,
said,
yeah, and if you don't have the $500 to pay a lawyer, dump it into ChatGPT, and at least it will do a fairly decent job at saying, "Hey, here are some things you may want to ask and look at," and especially if it's not very easily, if it's not really, sometimes some of these documents are very difficult, so it's difficult to figure out what am I actually getting into. And yeah, it's a great resource, just to
Darin,
give you
can I ask
level
you
the
a
playing
question
field.
though? I'm sorry to cut you off, but this is important. You're investing in a speculative asset. You're putting $50,000. If you don't have the $500 to get some type of consultation, should you be investing your last $50,000 into a speculative asset? I mean, what would you say to that person?
Yeah, I mean, you should just, yeah, if you can't afford to lose that money, just don't do it.
It's $500. I'm being honest because I wish somebody had told that to me. I put 172 grand into that deal. If someone had said, Gino, get in a plane, fly down to Florida, take a look at the deal yourself, and then you know what? Maybe do a criminal credit background check that'll cost you a few $100, and then maybe get an attorney to review the paperwork. I didn't do any of that. It would have cost me maybe $1,000 to do it all. Maybe at the time, maybe $1,500, but I lost 100 and not even the money. I lost the effort. I lost the time, the brain damage, the hatred that I had. All of that could have been saved if I had been frugal and not been frugal and done some work on the front end.
Yeah, I am surprised how reluctant some people are if they're gonna jump in put in a big chunk of money, and they don't. They could have just hopped on a plane to go look at the property.
Yes.
Go. Oh, this is where the company is located. Maybe I'll just go hop on a plane. I have it happen to me all the time. I mean, clients will say, "Hey, you know what? I'd like to. We're gonna hire you to be our lawyers for this big capital raise." And they'll just hop on a plane. And I say, well, look, I'm in Puerto Rico. You want to come down? They said, sure. So I meet them at the airport, or I'll take them to dinner or whatever, or they'll come to the office. And so it's, yeah, I mean, yeah, it's worth it.
Yes. What kind of deals do you like to syndicate? What kind of deals do you like to represent people?
I really like, I mean, we do a ton of real estate. we do a lot of real estate projects, syndications, we do a lot of opportunity funds where, they're looking at different, broad-based opportunity funds like private money lending and that kind of thing. But we also do a lot of technology deals. Like we just did a few days ago. We finished up they're a robotics corporation out of California. They're making these. I mean, talk about AI. These are like humanoid robots that they're building. I mean, I'm like, and they got a little. You can buy a little dog. I mean, it's like this kind of stuff is real, and they're tapping the private equity capital markets to get it off the ground, and most investors won't even get to see it until it gets to like the IPO stage, but if you're involved in obviously the private equity markets, or if you're an entrepreneur looking, hey, I got this cool invention and want to do this cool thing. Okay, look, you can do that if you again know the lay of the land, and then you set up an offering to make it investable, right? Um, um, all too often entrepreneurs they'll go and they'll pitch a deal, or but and the investor says, oh, I like what I hear, but then how do I invest it in you? And they don't have an answer. They don't have a PPM ready to go saying, okay, yeah, you can sign this paperwork and you're in. No, they say, well, hold still, let me go to my lawyer and come back to you in a couple weeks, and by that time investors moved on to something else. You have to strike while the iron's hot. So I'd say be ready to go if you're actually ever pitching your idea, or if you're just always be raising in a position to raise capital. That's just the best position to be in.
hmm So before we go to the short answers, I want to ask you, what have you seen over the last several years in my space of multifamily? A lot of capital being raised, a lot of LP equity has been wiped out because a lot of people use bridge debt, short-term financing, rates went up, rate caps. What have you seen over the last couple of years? Have you seen that carnage? Have you seen a lot of capital calls? Have you seen a lot of distressed assets coming online?
Yes. I mean, especially in like commercial office space has been a bloodbath. I mean, opportunity exists for, picking up some of those assets, but yeah, some of those, I mean, obviously the pandemic was, and it's, a lot of commercial spaces has yet to recover, right? It may never recover just because of, shifting trends and things like that. Um, and obviously, you mentioned private equity. I mean, the deals, a lot of deals, they have to search really hard, and really hard to find good deals. And sometimes they've got the pressure. Hey, we got to place this capital, and so they'll just buy anything that's maybe halfway decent looking, and so they'll maybe make some mistakes that way. So um I think, I mean, Warren Buffett, I think, is the best example of like, hey, man, just sit on that cash, just wait, 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 till you've got that right opportunity. And, he's really good at it. Of course, he's got, hundreds of billions of cash sitting on, right? So, but yeah, I mean, same principle applies,
He's
I
got
think.
350 billion sitting in the bank, and he made $1 billion investment to Lennar. Everyone's like, home builders are back. I'm like, bro, that's not even like 1% of what the hell he has. He's just throwing a little bit of money around, and he sees a little bit of an opportunity. So
Yeah,
I
he's patient. He's
yeah.
patient, so,
Mhm.
that's his game. So, yeah, I think we've seen a lot of that.
I love that. Let's take a quick time out to hear from our sponsor. This episode of the Jake and Gino podcast is brought to you by Wheelbarrow Profits, the premier multifamily education community. Wheelbarrow Profits proof is in their results. Their members have closed over 86,000 units. That's over $5 billion in student deal volume. Are you serious about taking your real estate game to the next level? Do you have the confidence to take action? Schedule a call with the Wheelbarrow Profits team today and supercharge your real estate knowledge. Build lasting relationships through unparalleled networking opportunities. Obtain lasting knowledge on how to buy multifamily real estate with intensive training. Gain hands-on experience through their live events with like-minded individuals and industry professionals, all while experiencing the personal touch and family atmosphere that set them apart. Visit wheelbarrowprofits.com for more information. And we're back. Now, Darin, my name is Gino. I want to start raising capital. I'm going to connect with you, Darin. Give me a little bit of a framework. What should I start doing to get actually all of my ducks in a row? Because listen, I've got an opportunity here, but I don't have enough money. and I want to do this deal, but where do I start? What should I start doing?
Well, I mean, self-serving, but buy my book, right? Raising
Yes,
Capital
absolutely.
Confidence, right?
Magnum.law, baby. Yes, that's the first thing you should do. Go to the website,
And this is,
magnum.law.
I mean, we've got it on. I think we got on the audio book or the ebook for like a couple bucks, And so if you can even get that, I mean, it'd be great just to give you the lay of the land. Like, okay, here are the regulations that are applying whenever you're. Again, we're talking about bringing other people's money into my company or into my deal. This is the lay of the land, right? And this is the things you want to do, and this is the way you. So obviously, that gives you a good overview. But again, I would say for sure get with a securities attorney. I mean, it doesn't have to be me. I mean, just find somebody that has um, at least, maybe not a brand new securities lawyer that's just out of law school. I mean, we've been practicing over 25 years now, but at least somebody that has been around the block a few times. I mean, like we've gone through the 2008 financial crisis. We've done a lot of deals over the years, and so. But find a seasoned securities lawyer to help you structure it right so that you're saying, hey, here's our goal, here's what we want to do, and we want to be able to attract this capital. What is the best vehicle to do it? Number one, and what like is it a corporation? Is it a limited partnership? Is it what is the structure in which that we're going to accommodate this capital? Number one, and then number two, what are the regulations that we can do it under? I mean, are we selling? Do we want to spread it to a lot of small investors? I always ask my clients, hey, what kind of investors do you want in your deal? Do you want to spread it to the masses and have a bunch of small investors, like a crowd, like a true crowd? And hey, you've got maybe, and it may make sense, and sometimes for that because maybe you have a database of 500 to 1,000 customers that would love to have a piece of your company or a piece of your project. And you could easily say, hey, why don't you put in couple thousand bucks each? And we got plenty of capital. I mean, regulation crowdfunding is a perfect fit for that. If you're raising more, obviously more than 5 million, and you don't want to deal with a bunch of small investors, well, obviously Regulation D is there. I mean, 90, 98, 99% of private equity is all, they all done under Regulation D. And there's a number of options, whether you want to publicly advertise or if you want to keep it on the down low. I mean, there's various options where these exemptions allow you to legally raise the capital. And maybe you have foreign investors, non-U.S. people that want to put in capital. Well, Regulation S is a great fit for that. So I would say, obviously, to talk to a securities attorney and say, at least hey, here's how we're going to go forward. And then, obviously, get those ducks in a row. So then when you do start talking to the investor and they say yes, you don't all of a sudden have a deer in the headlights panic, like, oh, he said yes. What now? What? So you can say, okay, well, here's our paperwork. Here, you're ready to go, right? And all too often, I think some entrepreneurs they'll go after they'll get the investor to say yes, and then the investor will dictate the terms, like a typical venture capital or vulture capital. They'll say, hey, look, I'll give you all the money, but I need to own 90% of your company. That these lopsided deal terms, and you got to be really careful when you're dealing with those sort of investors, right? So I would say, certainly figure out, talk to a securities attorney and figure out what kind of investors do you want, because the answer to to that question is going to dictate, okay, what are the various paths that I need to follow to get to the money, right? So
Mhm. Do you
yeah.
mind if I add a couple things to that from my personal experience? I would say the first thing, honestly, is about mindset, understanding that you're creating another business. All of a sudden, you have a database of investors. It's not just a deal anymore. You have to curate the investors. You have to create another business because the investors and raising capital and having all of that reporting and becoming an asset manager is different than property managing or doing taking the deal over. So understanding that's number one. Number two, proper preparation prevents poor performance. Don't get a deal and then run to Darin run to Darin after you listen to the podcast and say, Darin, I'm thinking of syndicating. Can I jump on a quick call to get some kind of ideas as far as structuring, as far as what kind of splits I should do, acquisition fees? How does that all look, Darin? Because I love AI, but this is so damn confusing. Should I do a 506B or a 506C? What does that look like? Can you explain it to me? Oh, I've got all this done. Okay. Now I'm going to start looking at deals. When I get a deal, it's going to take a couple of weeks for Darin to create an operating agreement, to create a private placement memorandum. All of that work. Don't get pissed at Darin because you come to him when you have a deal and he's under the gun. That's important. That's on you. And I'm just telling you that right now to be ready for that. I mean, if you want to expand upon that, I'm sure you see that every day where people expect they want you to overperform and underdeliver. There's no way for you to get this stuff done in a week. You can't get it done. You need
Yeah,
a
we
couple
need
of
at
weeks to
least,
get
I
some of
mean,
this
to
stuff
really
done,
do it
correct?
right. I mean, we need at least a 2 week. I mean, 2 weeks is we're really putting the pedal to the metal, making it happen. And obviously, the more prepared you are, the quicker we can work too, right? So I would just say, yeah, start early. Don't wait until, hey, our closing date's on Friday. We should probably call Darren or the securities lawyer on Monday and try to have paperwork by, I mean, it just doesn't happen. I mean, it's just, you're just asking for it, right? So start early is what I would say.
And it's actually interesting that you say that. I think the reason why you should have a call today, if you're going to start raising capital in the next 6 months, you're going to help them with other options. Like you said, crowdfunding may be good. Having it just sophisticated investors, or having sophisticated or having just accredited. There's so many different options where you're going to lay it out to them, and you can help with the structure. Because I've been through it. Our very first one, we raised $2.5 million in 48 hours. We had a big database, but we got together with our securities attorney a couple of times before we even started raising capital. Because once you start raising capital, you have to have the docs. You cannot legally start taking money unless you have everything out there, everything prepared. It's something that's
Yeah, and sometimes we've seen situations where they just like, oh, we can't wait, or we haven't, we just, oh, let's take the money and worry about it later. Well, you just hope that the wheels don't come off the bus, or I mean, it's easy to, in the fast and furious pace that you're going, you take the money and kick the can down the road. I mean, I've seen it happen time and time again where the investor has something else in their whole mind altogether, than what you were trying to explain. And anyway, but yeah, just get it. Just like anything else, preparation is key.
Mhm. Darin, I'm an eternal optimist, but I'd like to put the fear of God into somebody listening to this. I want to hear a horror story. I mean, I want to hear a real story of a client who wasn't prepared, who made all these mistakes, and it was really something that they could actually have avoided if they.
Yeah, back, referring back to the financial crisis of 2008. I mean, we had a couple of clients who we picked up. I mean, the clients that we had prepared documents for PPM. I mean, a lot of them lost their shirts as well, but nobody went to jail. All those cases got dismissed, or the SEC looked at it and said, "Oh, you know what? It's we can't get blood out of a stone. I mean, it's just nobody did anything wrong, so case dismissed, move on." Right? Where we did pick up a few clients who came to us in a panic. They were looking at criminal charges by the state. They were going to prison because they had borrowed all this money. I mean, and they were, from what we could tell, honest guys. They were trying to, hey, they're just doing real estate fix and flips, and just got ahead of themselves and had, I think they had like 50 to 60 promissory notes up to $60 million, of different people having these promissory notes. And back before the financial crisis, it was like, I don't know, everybody was just throwing money around like is like candy. It was like, oh, it's real estate, it's going to make money forever. And so anyway, he unfortunately got, I mean, we worked super hard on his case, and just, I mean, really it came down to just I pulled the prosecutor aside in a side room and said, look, this guy, he's not a bad guy. He's got a family. What can we do not to send him to prison? Because they just saw him as they're gonna make an example of this guy. And he really didn't deserve it. I mean, I'm sure the investors were like thinking otherwise, but it's like, look, what can we do? And so we got him to back off and plead, hey, we're gonna settle this case. he still took a huge, serious financial penalty and a securities bar, but he at least he didn't go to jail, you know. But he was literally staring down that barrel, you know, and we weren't, and he was asking us what do you think's going to happen? We're like, honestly, I'm scared for you because I don't know where this is going to go. And luckily, you know, thank God, you know, the prosecutor was like, you know what, I'm gonna, you know, I'm gonna ease off a little bit and give you some lesser charge. And so, and a lot of people don't realize, you know, yeah, we talk about the SEC. I mean, state securities regulators, they both have that they can be easily that they can bring civil charges and criminal charges. They're not like SEC is all civil, right? And then oh, we got to refer it to the Justice Department for criminal case. No, state securities regulators, they can bring both, right? And so a lot of times you see people the SEC kind of like skips over them, doesn't care, but they get nailed by the state regulator, you know, on criminal charges, right? Where they really, I've seen it a number of times where, I mean, you know, I mean, it's all, you know, I'm sure the investors are like, yeah, that guy should go to prison, right? But in my mind, look, I don't, as long as he was trying to do the right thing. I mean, he just was, you know, hadn't done his homework ahead of time, you know, and you know, in my opinion, those guys shouldn't go to jail. But then again, you know, if he does it again, obviously, okay, yeah, maybe you didn't learn your lesson the first time. But you know what I mean? So stories like that, and that was a case where, you know, I you know, really stayed up late at night worrying about him just as a personal matter, just like I didn't want to see him go to jail, and thankfully he didn't. But it kind of shows you how serious it can be. I mean, not to put too much fear into, oh, okay, I better not raise capital because it's scary business. I mean, it can be if you just run out there and do it without really, you know, knowing what you're doing, and get a little educated and get some help, you know, by securities attorneys and other professionals that may be able to help you, right? So anyway, but yeah, that's a story that I always remember, you know, when it comes to that kind of stuff.
It's interesting. I think the word that maybe you're trying to search for is he wasn't malicious. It wasn't fraudulent. He was actually, and I don't even was there negligent. He just made a,
Yeah.
he wasn't trying to
It
rip
wasn't
anybody
out
off. He
buying
just made a
boats
bad
and, you
business
know, throwing
decision.
big parties with it. He was actually trying to do it, you know?
Yes.
Yeah.
And most people don't. That's the thing. That's, you know, if it bleeds, it reads. What do they say? Those are the stories that people lead with and go, oh, okay, that's the pot. The majority of these people are just trying to run a business and they get caught up. They buy the wrong part of the market cycle. They over leverage. All of a sudden, they outgrow their infrastructure, and things go bad. And it's not being malicious or anything, but that's why, as an investor, you need to, you know, solicit the advice of a securities attorney. Make sure to let them read the PPM before we sign off. What does your firm do? Do you do docs? Do you provide prezos? I mean, what else do you guys? Because I know there's a lot of different services
Yeah,
that
I
you
mean, we're
provide to the whole
exclusively, I mean, a
securities industry.
securities law firm. That's all we do. And we just represent companies or entrepreneurs that are raising capital. We do not like we do SEC defense as well. Like if you're under the gun by a state or federal securities regulator, we do SEC defense. But that's like, you know, prevention is better than the cure, right? So you gotta, you know, we most of our time is dealt with on the front end doing all the you know, your prospectus or your private placement memorandum, your SEC filings, and just so you're protected from any kind of securities fraud claims. I mean, that's our number one job, you know. And we don't go after bad brokers. Sometimes we get a call from an investor, "Hey, this guy stole money from me. Can we sue him?" We're not litigators. I mean, we're not. I mean, we'd have good relationships with firms who are litigators, securities litigators. If you know, you had a bad investment, you had a bad broker, we would just refer you to them. But as far as we're more, you know, on the positive, on the growth side, you know, and so anyway, that's our specialty, our focus. If you're raising capital for any project or from anybody, you know, taking money from anyone, we should talk, you know.
It's interesting. I probably should have asked you this sooner. When don't you need to contact you when you're raising capital? Because somebody may be doing like a fix and flip, and they got. Is there any instance that you can think of that, hey, I don't really need a security attorney, or should you just contact one just to make sure that you're in the
Yeah,
right lane and that you're not making any
my
mistakes?
wife hates it when I use this example, but I'm like, if you're just borrowing like $100,000 from your grandma, don't call us. I mean, now if you're borrowing $1 million from grandma, yeah, call us, right? I mean, if you can't like easily reach in your pocket and pay grandma back, and you're like thinking, oh, grandma's never going to sue me, right? Well, if it's enough money, grandma might come after you, right? Or at least not invite you to Thanksgiving anymore, but but if it's again, if it's like if it's
Yes. Or grandma's heirs are gonna grandma's heirs are gonna come after you. If not
grandma's
grandma,
brother is going
grandma's
to come after
heirs and
you, or
everyone around grandma
somebody,
is gonna come after you.
But yeah, so I'm saying if it's a small amount from like my grandma or some like Uncle Ted, we're gonna go do this thing together. I mean, yeah, what's your exposure? Probably not a lot of money, and you know them really well. And yeah, I mean, Thanksgiving is going to be uncomfortable if you lose their money, but maybe they'll still love you anyway, right? If you're talking about money that, I mean, when I say serious money, like money that I couldn't just all of a sudden, you know what, that deal blew up. I can't just all of a sudden make everybody whole out of my own pocket. You're gonna want to have some legal protection, right? Especially if you don't know the investors that well either. And so it's really sort of a kind of like buying insurance. Like, do I need insurance to cross the street? To maybe I might get hit by a bus or something. Oh, yeah, I mean, probably not. You probably don't need insurance for that, right? If you're like, skydiving and high risk, okay, yeah, you definitely probably want some insurance. So it's kind of that question, how exposed am I? How much money is at risk, and how many people, honestly, am I dealing with? And if any of those numbers are higher than just a handful, then you might want to, I say the word invest. You want to maybe invest in some protection, bulletproof vest, maybe a good idea. Maybe a helmet, good idea if I'm going into battle. Okay, well, same is true with the legal, our American justice system or legal system. You want to have some protection because it's it can be a jungle out there, right? So
Yes. It's actually interesting. What Darin is saying, if there are 6 or 7 or 8 of you out there that want to get together and create a joint venture and think you're all going to partner up and you're all going to have responsibilities, just take a step back, pick up the phone, give Darin a call, or actually use his chatbot, ask him that question, and they're probably going to tell you you're probably creating a security. I mean, there's not enough room for 8 people in a deal. So just be careful, be wary, because that's where a lot of people fall into it. And it's all great. It's all sunshine and rainbows until you hit a recession or until the capital calls start. That's the issues end up. That's when they start popping up. Darin,
yeah,
where,
you can
where can the listeners
definitely
get a hold
go
of
to
you?
our law firm website, mangum.law, as our main law firm website. Um, you mentioned my chat bot, Darin Mangum at .ai is you can chat there, but we can certainly connect. We never charge for phone calls, so yeah, just let us know.
That's awesome. Listen, I want to thank you for being on the show. And as like my business partner Jake likes to say, we believe in buying deals for the long term. This is Gino Barbaro from Jake and Gino, and we'll see you on next week's show. Take care, everyone. Thanks, Darin.